Hello guys, so welcome to another Forex educational video. This time I'll be covering top-down analysis, or it's also called multi-time frame analysis. They all just mean the same thing. It depends, with the name you prefer. So in top-down analysis, first of all, before we start, I want to just mention that this is one of the most important concepts in Forex trading. In fact, if you're still struggling to be profitable, if you're still struggling with the analysis, you have analysis but the market doesn't respect it. One of the reasons you could be undergoing that difficulty is because you still haven't understood top-down analysis. So if you understand top-down analysis, it will help you to have a very high probability analysis. It will help you to identify high probability setups, and it will definitely increase your winning rate, and it will make you to have a profitable edge in Forex. So just as the name, top-down analysis, it means that you do analysis from top to down. So when we say from top to down, this is what it simply means. The Forex market has different time frames. We have the 1 hour daily. In fact, if you're able to look at our time frames here, you can identify that we have very many time frames from the 1 minute, 45, 1 hour, 1 month, 1 day. So with all these time frames, it can be confusing for you to trade the Forex market, because if you look at the 1 hour time frame, it's easy for you to say that the market, wants to buy, or the market is selling. If you go ahead and look at the 1 minute time frame, you're gonna get a very different impression. You see the market is now selling, but if you look at the 1 hour time frame, the impression is not the same, because on the 1 hour time frame, it's clear to us that the market looks like it's now buying. So for you to avoid all this confusion, it's important for you to be able to understand, what drives the price on the lower time frames. So in a nutshell, this is what I'll just say. Whenever you're doing your analysis, make sure that you start from the higher time frames. When I talk of the higher time frames, these are the time frames that I recommend: 1 day, 1 week, 1 month. And for simplicity, for a start, just focus on these two time frames, the weekly and the daily. Weekly, daily. Use those two time frames or the higher time frames. Then, after analyzing from the weekly and the daily, you can now come and find your trade on these lower time frames, depending on the time frame that you use. Myself, I'm an intraday trader. I take almost all of my trades using the 1 hour time frame. For example, this is a trade I took this week. You see, I had a risk reward of about 1 to 3, about 90 pips. I'm going to break it down for you guys in a few, but before I took this trade, I analyzed it first from the weekly time frame. So the importance of the top-down analysis is very simple. You see, when you look at the market from the weekly or the daily time frame, it shows you the behavior of the market in the long run. So what that means is that it gives you a long-term perspective of what price is doing. If you look at the market from the 1 week time frame, it shows you the behavior of price in the past or in the past several weeks. You understand? So this is more long term as compared to the 1 hour time frame. The 1 hour time frame shows you the behavior of price, maybe in the past few hours, in the past 1 day or something, but it's very immediate. What that means is that it's easy for you to get a fake out if your analysis is based on the lower time frames, like the 1 hour or the 30 minutes, 15 minutes. So if all you depend on is looking at the 1 hour, 15 minutes, 30 minutes, higher chances are that you're gonna fail. That is why it's very possible for you to understand the Forex concepts and still lose. Have you ever realized that there are times you look at your chart, you'll be able to do a very perfect analysis, especially on the 1 hour time frame. You can even mark and spot there's an uptrend. You can even draw an M pattern, a W pattern, but all these patterns are failing. Then according to you, you start to think that, these patterns don't work, because you wonder how comes that you learned about an M pattern and the person who told you showed a practical example and the M pattern worked. But when you try to apply it using your analysis, it's not working. Most of the time it's because it's a fake out. So to avoid fake outs, it's important to first know what the market is doing on the higher time frame. When you have an understanding of the larger time frame or the higher time frame, like the daily and the weekly, you now have a long-term perspective. So based on the long-term perspective, you now come and make a decision on the lower time frames like the 1 hour or the 30 minutes. So in other words, whenever you're analyzing, you want to make sure that the higher time frames are always in complement with the lower time frames, or rather, there should be no contradiction in the analysis. So let's say you analyze the weekly and the daily time frame, and based on the structure or the behavior or the pattern on the weekly and the daily, your analysis is that, let's say this is NZUSD, for example. Let's say NZUSD should sell according to the weekly or the daily time frame. So after knowing this, whenever you come down to the 1 hour time frame or the time frame that you use to trade, maybe it's the 30 minutes, depending with the type of trader that you are. In my case, it's the 1 hour. You want to make sure that the lower time frame also gives you the very same indication. So if the daily is telling you to sell NZUSD, remember the daily is showing the long-term perspective, so it has more power as compared to the 1 hour time frame. If the daily is telling you to sell NZUSD, then you come to the 1 hour time frame and you get something like a buy signal here. I will advise you don't take the signal. Unless you can get a complete market reversal and the higher time frame supports that, don't take the signal of the lower time frame. If the daily is telling you to buy NZUSD and the 1 hour is telling you to sell, it's contradicting. That is a very wrong trade. It doesn't mean that it couldn't work, it could work, but if you want to find a profitable edge and win most of the time, because remember the key point of forex trading is to find high probability trades. You might lose once or twice, but you want to be winning most of the time. So if you want to find high probability trades, make sure both analysis are giving you the same indication. So if the daily is telling me to sell, then on the 1 hour time frame I find a good sell signal, that will be a valid trade for me to take. So basically that's top down analysis. I'm gonna show you some practical examples using the live trades that I've taken, in fact, just this week, so that you may understand the concept even more. So this is NZUSD, is a trade I took this week. I also sent it to my community members. So I'm just gonna do a breakdown of the trade. Let me first remove everything from the chart. As I've said, we start with the weekly time frame. We look at the 1 week. So looking at the 1 week, I want you to be able to identify the pattern first of all. When you're looking at the 1 week or the higher time frame, you want to look for a pattern. Is there something like an M and W? Is the market in an uptrend? Is it in a downtrend? Do we have long shadows? Do we have long body candlesticks? You want to be able to identify where the direction of the market is towards from the higher time frame. Is there consolidation? Is there confusion? For example, if you identify this consolidation from the higher time frame, that easily warns you that it's not a good time for you to be trading that pair. So in this case, NZUSD on the weekly time frame, if you look carefully, the market is in some sort of a downwards channel. Price is actually forming lower highs and lower lows. We can start from that point. Price dropped, so price is forming lower lows, it's forming lower highs and lower lows, and it's in that series continuously. So having identified this, it's very easy for you to know that higher chances are that NZUSD should be dropping in the long run. So now let's look at the previous week. When you look at the previous week, this is the previous week. I want you to look at the previous week. Price closed with a long body candlestick. The long body candlestick signifies that we have strong sellers, we have strong momentum, right? Also, if you draw something like a mini neckline here, price dropped below and the candlestick body closed below this previous low. You understand? So when price closes below this previous low, it's also an indication that the sellers are now strong. So having known this, you can just look at the daily time frame to see whether you have any contradiction. So when you look at the daily time frame, price has also been dropping in the long run. So what I'll do, I'll go back to the weekly time frame. I'll go and mark the beginning of this week because I want to show you how I was able to get the trade this week. But I've used the last week analysis, which is the long-term analysis, the 1 week, to identify momentum. So I already know that higher chances are that the beginning of this week NZUSD should be dropping. So I want you to open your chart and look at this week. This is the beginning of the week, right? So we had some little pattern, but if you look generally, price was in some sort of confusion because it wasn't moving much. Because when you're looking at your 1 hour time frame, you now want to look for anything significant to tell you to sell NZUSD. At all this point, we have consolidation, we have confusion, so there is no reason for me to sell when there's consolidation. So I'll stay out of the trade until I find a reason. What happened eventually is that we got a long body candlestick, a strong bullish candlestick breaking to the upside. So at this point, if all you do is trade consolidations, I want you to see the importance of this top-down analysis and how it helps you to avoid fake outs. Because if all you do is to trade consolidations, it's easy for you to say that price has broken out of the consolidation to the upside, which means NZUSD is now strong, so let's buy NZUSD. But look, if you took a buy trade, price just bought a little bit and then it made a complete reversal. So let's go back to our analysis. We already know that NZUSD should drop from the weekly time frame. We've now watched the price for about 2-3 days consolidation. We had a breakout to the upside. We still don't have a good reason to sell. So now this is where you start applying other tools of analysis. When you see NZUSD at this point buying, this since you already know the price will drop, it will be easy for you to start anticipating that this buy trade is simply a retracement and not a complete reversal. You understand? So if you know that this buy trade is a retracement, that brings me to something else. When the market is retracing, then the question is simple. How far should price retrace to? Last week I covered Fibonacci trading using Fibonacci retracement. So we'll come and use the previous impulse, which is from that point to this low, and we want price to retrace at least to the 0.5 level Fibonacci from that high to this low, because price is not retracing at this point. So we look at the lowest point here, which is somewhere there. You draw Fibonacci there and extend it to the right. Then you come and mark the 50, or rather the 0.5 Fibonacci level. So last week I said that when price is retracing, you want it to retrace at least the 0.5. It could go all the way to 6 or 7, but it shouldn't go all the way to 1 because that might not be a retracement anymore. So when price gets to 0.5 or 6, you want to watch for a very any significant reason to sell. So price go to 0.5. If you can see, it got to 0.5. It also got to 0.6. And I want you to look at the behavior of price when it got to these two zones. So at this point, we are now trying to anticipate anything to make a sell NZUSD. When price got to 0.5, it didn't immediately form any sell signal. In fact, the candlestick was green. But then here we started having some confusion. Price was selling, buying, selling, buying, selling. Then at this point, we had a long shadow. So this long shadow is a good indication of possibility of buyers are being rejected. Remember, we are at the 0.5. In fact, this is the 0.6 level. So it is a very good level for us to start anticipating and say the issue will sell. But now we want to look for a reason before we sell. Because remember, it's possible for price to get to the 0.5 or 6 and it will not sell. It's possible that the market could make a complete reversal. So how do you avoid losing in this trade? Just because it's at the 0.5 or 6 level doesn't guarantee you that it will take a sell. So you want to watch for significant patterns. You want to watch for significant candlesticks behavior. Here, if you look carefully, we had a long shadow. We had a Marubozu candlestick. I taught in the candlesticks video that a Marubozu candlestick is a candlestick which one of the sides, there is no rejection. If you look at this candlestick, at the bottom of the candlestick, there is no rejection. So that candlestick shows you that sellers are very strong because no buyer was able to reject the sellers at this time in the period of that 1 hour. So that's a good sign, first of all. So at this point, you are anticipating that sellers will take control. But I always advise you be as patient as possible before you jump into a trade. There's no need for you to jump into a trade here. Then again, price starts buying, then you're frustrated. So you be more patient. You got another long body candlestick just a few hours later, which is here. So when you look at that long body candlestick, I want you to realize that that could act as your second confirmation. So this could now be a good time for you to get into a trade. Myself, I didn't take the trade there because I like being as patient as possible. I just wanted to learn from my analysis that there is no glory in rushing to take a trade. You'd rather be the most patient trader and just get 3 to 4 trades a week and be profitable than trying to take trades all the time and losing. The advantage of being very patient in Forex is one. Whenever I take my trade, I'm so confident in that trade that even if price starts having some manipulative behavior of going up and down, I'm not so quick to close the trade. But if you take a trade that you are not sure, whenever price starts retracing just a little bit and you see a small loss in your equity, you are so quick to close the trade because you are not frustrated, you are not sure about the trade. So this is a second confirmation, but I didn't take the trade there. I was more patient. We had some candlesticks playing here. Then after this candlestick finished playing, I wanted to see what happened next. We had some small games here. After the games, I wanted to see what happened next. We had another long body candlestick. So this is now when I was convinced that sellers are indeed strong, because the first thing is that price got to the 50 level fib. It went to the 0.6 fib. Then we had a long shadow to the upside. We also had a Marubozu candlestick showing us that the sellers are strong. Then we had a long body candlestick confirming that the sellers are strong. After a few hours, we had another long body candlestick showing that sellers are indeed strong. So at this point, I was convinced that the price is going to drop. So what I did is that I came and looked at this candlestick because it's a very long candlestick. I didn't want to take my trade exactly here below the candlestick, because remember, you're taking the trade after this candlestick has closed. So after it's closed, if you take your trade here below, then your stop loss has to be somewhere above that candlestick, which is somewhere above there. So in my case, I waited for price to retrace a little bit, and when price got to almost half of this candlestick, which is here, that is exactly where I took my trade. So that's where I took my trade. And then when you take your trade there, you have your stop loss. Normally on NZUSD, I use a stop loss of about 30 pips. So this is my entry point. My stop loss is above that candlestick. Above the candlestick is about 15 pips, but it's important to give you a trade room, for breathing. So I put my stop loss at about 30 pips, and my risk reward was about 1 to 3. Then you come and target about 90 pips. So that's how I got the trade. I hope you've understood the top-down analysis concept using this example. So here's the final example. This time now a bullish trade. The other one was a trade that was selling. So let's use an example of a trade that I took a buy trade. This is Euro and ZD. Again, just this week. This was the trade. Let me just do the breakdown from the weekly time frame. If you look at Euro and ZD, price has been dropping generally. But the importance of understanding this analysis is that you can be able to spot the immediate behavior of the price. So price is dropping if you look at the weekly time frame. But when price got here, it got some rejection, then we've been having some buy candlesticks. So does it mean that price is reversing completely? Probably not. So looking at the weekly time frame, it was difficult for me to get a very clear direction of Euro and Z. So what I did, I went further to the 1 day, the daily time frame. So looking at the daily time frame, I think I got a clearer vision here, because first of all, if you look, we have some sort of behavior like price is forming some sort of inverse head and shoulder. Let me just mark it so that you can see. That looks like the shoulder. Then we have the head below here. Then we have another shoulder somewhere there. So when I look at the daily time frame, it became easy for me to spot this inverse head and shoulder. But this isn't enough reason for me to say that Euro and Z is now buying, because looking at the time frame, the weekly time frame, the direction is still looking like a downtrend. So from the daily, I was able to identify that this price was in a possible retracement. Because of this inverse head and shoulder, I was able to identify that this price was in a possible retracement. So when price is retracing, we just apply the same concept. We take the Fibonacci, we use the previous impulse, We draw from the highest point to the lowest point. So using this impulse, we want price to retrace at least to the 0.5 level. So I come and I mark my 0.5 level like that. And that's how simple it is. And then I go to the 1 hour time frame. So when I'm analyzing your NZD this week, it's very simple. Let me just first of all go and mark where the week began so that it becomes easy. This is Euro NZD. Let's go now to the 1 hour time frame. So this is where the week began. So when my week begins, I'm anticipating that Euro NZD should be bullish at least to this 0.5 level. In fact, as we speak, it still hasn't gotten there, but it's bought with some good momentum this week. So looking at Euro NZD, the market behavior from Monday, it wasn't very convincing for a buy trade because price was very choppy. We had a lot of spikes. It was up and down, up and down, up, down. It had no clear direction. So I was very patient. I stayed out of this trade. In fact, at some point, I thought I was gonna miss this trade because it didn't give me a very clear and smooth pattern for me to get a very solid buy trade. Until at this point when I saw price making a very huge drop. When price made a huge drop here, it's when I came and took the Fibonacci here. Then I put it from the lowest point to the highest point here. And then I mark the 0.5 level or the 0.6. So when price gets to the 0.5 or the 0.6, I'm anticipating that that could be a good zone for me to now find a buy trade, because I've been looking for the buy trade since Monday and there was nothing significant for me to believe that price was buying, because it was trying to buy sell until somewhere yesterday price dropped to this 0.6 level. So when price dropped to this 0.5 or 6 level, it's now a very good zone for you to anticipate that the buyers could continue being in control. So again, I want you to see the difference between someone who understands this concept and one who just uses the lower time frame. On the 1 hour time frame, looking at Euro NZD, by the time we had this long candlestick here, let me mark it, it could have been easy for you to think that Euro NZD is now selling strongly. So you will even take a sell trade here, expecting Euro NZD to continue dropping. But based on my analysis on the weekly, on the daily time frame, I was expecting Euro NZD to buy at least to this point. Just so that you don't forget what we are doing, on the daily time frame, we've drawn a Fibonacci from this point to this point. This is the 0.5 level. So that means this week we were expecting price to retrace to at least this level. So when we are in the 1 hour time frame, we want to buy and expect Euro NZD to go all the way at least to this point. So price retraced to the 0.5 level here. The 0.6 level. Then at the 0.6 level, we had some uh, strong rejection. This is the first one, this is the second rejection. So just to remind you, long shadows represent price rejection. So that's the first, this is the second rejection. So this is a good sign that sellers are becoming weak and maybe buyers are about to become strong. And after a few hours, we had this candlestick here, which is somehow a strong bullish candlestick, which signifies momentum. So this is where I was convinced to take the trade. But as I always advise, you can be more patient. So if you miss the trade here, or if at this point you are not sure that Euro NZD was going to continue buying, you be more patient. Then we had another long body candlestick after a few hours. This is the long body candlestick. So at that point, you are now convinced that the trade is a good trade. You can take your trade there. On Euro NZ, usually use a stop loss of about 40 pips because Euro NZ is usually very volatile. I use a stop loss of about 40 pips, and then you can target. If your risk reward is 1 to 2, you will risk 40 to make 80 pips, which price go to eventually. Or if your risk reward is 1 to 3, you'll risk 40 to take 100 and about 20 pips, which price also reached eventually. So in fact, from my analysis, Euro NZ has still not got to the 0.5 level, which means that from my next week, I could possibly continue looking for buy trades until price gets to this zone. Yeah, so that's how I use the top-down analysis to be able to find my trades. So is it possible to I mean, let me just make one thing clear. If you look at the 1 week, it's possible to say that price has been in a downtrend. Most of the time, you're not supposed to trade against the trend. You're not supposed to trade against the direction. But because you understand top-down analysis, you already know that price is going to retrace all the way to this Fibonacci on the daily time frame. And even if you're not supposed to trade against the trend, if you know this, from this point to that Fibonacci 0.5 level, it's a whole 300 pips. So you can be taking some of these 300 pips as price goes back there before it continues dropping eventually. So basically, that's how you trade any market using top-down analysis. It's very important. And I just advise you do lots of practice on this concept. It doesn't matter how much myself or anyone teaches you these concepts, especially in price action. It takes a lot of practice because trading is a skill, so you have to practice it so much until it gets inside your system. So whenever you open a chart, it's easy for you to do this analysis very quickly. And also, when doing top-down analysis, it's important to mention one thing. We have very many forex instruments. We have these pairs, we have the indices, we have the metals, we have the gold. Whenever you're doing the analysis, it's not all trading instruments that will give you a perfect analysis. For example, you can analyze Euro Audi, get a buy signal on the weekly and daily. When you come to the 1 hour time frame, you get a contradicting signal. Leave it. Continue doing the analysis until you get the 3 or 4 pairs that will give you the perfect analysis, and then focus on those 3 or 4. Like this week ahead, I did like 6, 7 analysis, but out of all the analysis, I've taken about only 5 or 6 trades because, in fact, I did about 8 or 9 analysis on different pairs, but I've only taken about 5 trades, in fact, to be exact. Out of the 5 trades, I've only lost 1 trade. I've won the rest 4 of the trades because there are some trades which won't exactly follow your analysis. So if it doesn't follow your analysis, don't stay there and get frustrated and keep on waiting for it to do exactly what you want it to do. Move on to the next pair. If you do this for all the pairs, you won't miss 1 or 2 pairs that will do exactly what you want them to do. Then take a trade on this pair. And when you have that level of confidence, you hold your trade and wait for it to hit your TP. Yeah, so basically that's the end of this video. Make sure to join our Telegram channel. The link is in the video description to follow our weekly analysis.